Welcome to Investors Meeting Point channel. Today we present the potentials of Federal Bank, a strong contender in the banking sector, poised for long-term growth and profitability. In this video, we will walk you through Federal Bank's performance, financial outlook, and why it is an attractive choice for equity investors aiming for substantial returns in the long term. Federal Bank's loan book growth trajectory is impressive, with the loan portfolio growing from Indian rupees 1,744 billion in financial year 2024 to a projected 2,891 billion by financial year 2027, representing a robust compounded annual growth of 18% over financial year 2025 and 27. This growth is fueled by the bank's strategic focus on high-yielding segments such as credit cards and microfinance, which saw a remarkable year-over-year growth rate of 73% and 107% in financial year 24, respectively. This strong loan growth will be a key driver of revenue, positioning the bank for continued profitability and solidifying its appeal for long-term investors. The bank's deposit base is set to expand significantly from 2,134 billion in financial year 24 to an estimated 3,475 billion in financial year 2027, maintaining an 18% year-over-year growth rate. This growth rate is largely supported by an increasing share of term deposits, which grew by 24%, as well as the bank's focus on deposit mobilization. Federal Bank is effectively balancing its low-cost funding base while growing its deposit franchise, which is essential for supporting its expanding loan book. Federal Bank's net interest income is projected to grow from 82.9 billion in financial year 24 to 141.7 billion by financial year 2027, an increase of over 70% over the period. This upward trajectory in NII, net interest income, is underpinned by the growth of high-yielding loans and efficient management of the cost of funds. As the bank continues to shift its loan mix towards more profitable products, the surge in NII will be critical in bolstering the bank's overall financial performance, making it an attractive proposition for investors seeking stable income-generating assets. Federal Bank's net profit is expected to increase from 37.2 billion in financial year 24 to 60.3 billion in financial year 2027, reflecting the bank's ability to generate higher returns from its expanding loan book and improved operational efficiency. The growth in net profit, representing compounded annual growth of 17% during this period, underscores the bank's ability to maintain profitability even in a competitive and evolving financial landscape. This strong bottom line growth is a positive signal for equity investors seeking long-term value. The bank's return on assets is projected to remain stable at 1.3% from financial year 24 through financial year 27, despite rising loan growth and profitability pressure. Federal Bank's consistent ROI performance demonstrates its ability to manage risk and maintain asset quality while delivering profitable growth. Maintaining this stable ROI in line with industry standards further reinforces Federal Bank's standing as safe and reliable investment for those looking for consistent returns over the long term. Return on equity is forecasted to improve from 14.7% in financial year 24 to 15.2% by financial year 27, indicating the bank's efficient use of equity capital to generate profits. The steady improvement in ROE, coupled with projected increase in net profit, makes Federal Bank an appealing option for investors focused on maximizing shareholders' value. The bank's capacity to enhance returns for equity holders will likely boost investors' confidence, positioning the stock as a solid long-term investment. Federal Bank has demonstrated strong asset quality with gross NPA at 2.1% in financial year 24, expected to decline further to 1.9% by financial year 27, and net NPA improving from 0.7% in financial year 24 to 0.6% over the same period. This reduction in bad loans highlights the bank's prudent risk management practices and its focus on maintaining high-quality loan portfolio. This improvement in asset quality is a critical factor for investors as it reduces the risk of loan defaults, ensuring more stable returns in the future. Federal Bank's cost to income ratio is expected to improve from 54.5% in financial year 24 to 50.2% by financial year 27, indicating a gradual reduction in operating expenses relative to income. This improvement is driven by investments in technology, branch expansion, and digital banking initiatives. As the bank continues to optimize cost and enhance its operational efficiency, the decline in the cost-to-income ratio will contribute to higher profitability, making the stock more attractive for equity investors looking for efficient operations. The cost of funds is projected to stabilize at 5.44% in financial year 24, gradually decreasing to 5.3% by 27. Despite the marginally higher cost of funds compared to larger peers, federal banks' focus on increasing the share of high-yielding loans will help offset this cost, thereby maintaining a healthy margin. The cost control coupled with higher income from interest will support the bank's bottom line growth and make it more lucrative options for investors focused on long-term returns. Federal Bank's capital adequacy ratio is expected to remain strong, declining slightly from 16.5% in financial year 24 to 14.4% by financial year 27, but still well above regulatory requirements. The strong capital position ensures the bank has ample buffer to absorb any potential losses while also supporting future growth initiatives. For investors, a strong capital adequacy ratio translates to lower risk and higher confidence in the bank's ability to withstand economic fluctuations. The bank's credit cost is projected to remain stable, rising slightly from 0.1% in financial year 24 to 0.4% by financial year 27, reflecting the bank's ability to maintain asset quality while managing potential risk in its loan portfolio. This low and stable credit cost demonstrates Federal Bank's effective underwriting and risk management practices, making it safe investment for equity investors concerned about the bank's exposure to credit risk. Based on Federal Bank's solid financial performance, growing loan book and focus on high margin products, it is well positioned for long-term growth. The bank's increasing profitability, improving cost efficiency, and attractive valuation make it as a strong buy for investors seeking exposure to the Indian banking sector. Investors can expect sustainable returns with Federal Bank as part of their long-term portfolio.